Australia is the world's most China-reliant country. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. I have my lunchtime stein of coffee and I was sent this article just a few moments ago by a viewer. And thank you very much because it's a perfect topic for a lunchtime video and it really aligns with a lot of what we've been looking at the last few weeks, if not months, on the channel. That's to do with Australia's, well, significant, shall we say, reliance on the Chinese economy, to the point where, well, I think we should all be a little worried. So the world's most China-reliant economy reels from the virus shockwaves. Businesses and universities are scrambling. Now, I can't say I'm too surprised that universities would scramble. They are so dependent on this foreign money. And if you've ever worked in a university and seen just how much BS and politics and non-productive people, just bureaucrats, paper-pushing bureaucrats they have in there, they don't actually add any value, you'd feel as frustrated as I am. Now, before we look at this, I just want to bring up my favorite website. I know, everyone's seen it before if they're a regular of the channel. That's not the Trading Economics, but the Observatory of Economic Complexity, because it shows, and I know the data's from 2017, but it's the easiest that we have access to right now. It just shows the amount of, our top export destination. The amount of it that's going to China is 35%, but they're also our biggest origin of what we're importing from. More than double the United States. 24% of what we're importing comes from China, guys. 24%. Where's New Zealand? 2.8%. I like my Kiwi cheese. And then we've got the States. So it's China, the United States, South Korea. Well, South Korea's already got issues with the virus as well. Japan, and then Thailand. So there you have it. I wonder if Brexit will mean there'll be closer ties between Australia and the UK. We'll have to see. Maybe that's an opportunity. So, you can see why we're in a bit of a bother here in Australia, guys, to put it politely. So, the coronavirus hit has exposed the extraordinary depth of Australia's economic dependency on China and fueled questions over whether the nation is too reliant on the Asian behemoth. I wouldn't say it's probably brought it to the public attention. More people are now made aware of it. It's going to start affecting people on a day-to-day basis. When probably for the first time in someone's living memory, you go to a shop and you can't buy something because it hasn't, the supply is dried up. Does anyone remember? I think I remember in the 80s lining up for petrol with my parents. When's the last time that's happened? Think about it. The dependency on display in the Western Australian coastal town of Geraldton, where an ocean dragon fires the income of local fishermen. The loxia, literally dragon shrimp in Mandarin, is prized at celebrations in China for its rich red color, horns, and spine that reminds Chinese of the mythical creature. The coronavirus shutdown on the eve of the Lunar New Year means Geraldton's fishing fleet is stuck at port during this traditional bountiful period. And we've had a look at that in a previous video. It was over 90% of the export goes to China, and that's about 70% of the industry in Western Australia. And this is just one industry. We have a lot of others, guys. I mean, I'm sure they'll go through it here in the article, but that just shows you putting all your eggs in one basket. And we've not just done that in one industry here, one industry there, one there. The university industry has got all their eggs in one basket, pretty much. A lot of our export, how much of our iron ore goes over there? Western Australia, I would say, is going to be the worst hit from all of these, from this entire decline in trade with China. So Matt Brudder, CEO of Geraldton Fishermen's Cooperative, estimates the rock lobster catch between then and the end of March would normally be close to 2 million kilos, with a market value of more than $120 million. But not this year. Boat captains, deckhands, truck drivers, export packers and others have seen little work and even less cash. It's the first time there's been a stop on fishing. Now, I went through the history of the cooperative, guys. And it started because a bunch of fishing boat owners got together, and it just grew from there. Originally they supplied lobster to the US military. They had contracts there at canneries. Fish put clay pots to catch rocks lobster. I mean, how many of you can afford to eat lobster that often? It's quite expensive. What they're selling it to the Chinese, just you can't blame them for wanting to make the money, can you? But see, this is the problem. Australia is the most China-reliant economy in the developed world, with about a third of its exports going there. Chinese nationals making up roughly 38% of its foreign students and 15% of its tourists. 38% of the tourists. 38% of the foreign students. I can't say that's too surprising, thinking back to my university days. And it's come out as some of the universities are just being completely shonky with the English requirements just to get people in. Because they just want the money. They just want the money. And these poor students, I remember sitting next to a friend, and he was opening up a book and look at this, I'm paying a fortune to come here. And because he was an international, and it's a complete copy and paste from the last lecture. And we had some pretty lazy lecturers, to be honest, in saying we had some good ones, but some pretty lazy ones in some architecture courses. So some of them, I feel bad for them. Honestly, I think some of these students are getting ripped off. We're getting a test run of what many people worry might have happened as a result of political tensions, but instead it's a result of a health crisis, said Richard McGregor, author of The Party, The Secret World of China's Communist Rulers, and a senior fellow at the Lowy Institute in Sydney. So we'll see how the Australian economy holds up, and we'll get a test of the ability of various sectors like tourism and education to diversify their customer base. See, this is the thing. I remember speaking to lecturers about just the number of international students at universities. And one thing one lecturer told me, which has stayed with me, was we're the poor man's United States and Europe. Your dollar may go a bit further in Australia, the climate's nice, it's still closer to home, so you come here. But if you've got enough money, better exchange rates, you'll go to Europe, or you go to US. More prestigious universities, better name. I don't know. What do you think, guys? What about your university experiences? Do you think that's on the money? Let me know in the comments below, everyone. So a shipment of honey illustrates how quickly the scale has turned. In December, wellness and nutrition group Eve Investments struck its first deal with a Chinese distributor for organic honey from its Maluka Australia brand. The shipping container holding that order of more than 21,000 units from its property outside Ballina in New South Wales North Coast is now being held on the docks in Sydney, awaiting clearance from its destination port in Shanghai. Well, we also saw with the Ishkar retail failure how dependent these businesses can be on this. You'd hope that they'd take a partial payment before they deliver it and then receive the rest after. See, this is different. In my business, I just have to give clients credit to do the work and get paid. If it's builders, it's a month and a half sometimes. But tradies, exporters, manufacturers, they have to carry the cost of these 21,000 units. That's not sitting in their bank account. It's not capital out of their business. So there is a role reversal, a shift in Australia's tourism markets with greater share for China. So we can see here, that was Japan. I remember when Japan was popular. I used to work in the Woolworths and Surfers Paradise down the Gold Coast, and the Japanese would love the Tim Tams, the Arnott's Tim Tams. They would literally stack up a whole container of them and just take them all home. So look, Japan's dropped. US has remained pretty steady, but China has shot up. The biggest issue at the moment is one of logistics. With some of the ports sending people home, it does complicate getting products in there in a timely manner, said Managing Director Bill Fry. For now, like many Australian business people, Fry remains fixed on the massive dividend a country of 25 million can reap by tapping into the demand of 1.4 billion people. Longer term, the virus could drive demand for Maluka honey as people turn to products with medicinal value to try and boost their immune system, Fry says. Ben Woodward, who along with his two brothers runs the Capta Group with natural parks and jungle tours across far north Queensland, says the cascading effect of the coronavirus fallout is in a league of its own. This is uncharted territory, he said. It doesn't just affect tourism. The spillover affects other industries like retail, transport, cafes, and so forth as well. So people are starting to get probably a hard lesson in economics. A very hard lesson in economics. So what could Australia have done to avoid this, guys? What could they have done to avoid this? To avoid such a dependence on one nation? Leave your suggestions in the comments below, guys. So, I mean, there you go. Nearly 1/4 of Australian trade is with China. So, there you go. Oh, see, their data's only till 2018 as well. Department of Foreign Affairs and Trade. The family, whose business started back in '76, has cut hours for some of the odd 200 staff across its Butterfly Sanctuary, Wildlife Reserve, and other businesses. There you go. It's smaller firms in Australia that are working capital dependent that are most at risk, says Tim Toohey, a former chief economist for Australian at Goldman Sachs Group Incorporated. He expressed surprise the government hadn't put in place a system to cushion the blow. It wouldn't cost a lot, and it would probably save a lot of jobs and businesses that would be very hard to restart again, said Toohey, now at Yarra Capital Management. The terrible timing of the hit to fishing and tourism was matched by the blow to Australia's education sector, the fourth largest export industry. Just think about that, the fourth largest one. That's pretty big. In Sydney, the nation's oldest university is scrambling to cope with 15,000 Chinese visa holders locked out by the travel restrictions just as the academic year begins. The danger is Chinese parents will pull their children out of Australia's institutions and instead send them to the UK or Canada when the year begins in August or September. There you go. There you go. I wouldn't blame them either, honestly. I would not blame them either. Why not? You're not going to lose a year. So that's why the universities are offering them, money to get in there, get around the quarantine, all these things. Is that a good sign, guys? Or does that show you our universities are too dependent on these international students? It's propping up the unis. Officials at Sydney University are trying to be flexible and keep communication open with a dedicated website and video for Chinese students. It's made clear they can catch up if needed, and that there are alternative paths if the travel ban is prolonged. Alternative paths. Is that people smuggling, guys? Chinese nationals make up just under 1/4 of the university's total student population in 2019. 1/4 of the university's student population. What do you think about that, everyone? Damn. That's grown since I was at uni. Students will have the option to defer or withdraw without penalty by the final census date of 31st of March 2020, says Michael Spence, Vice-Chancellor and Principal of the University of Sydney. The one-child policy has meant that Chinese students have the most disposable income of any international group. That produces a ripple impact on accommodation providers, cafes and restaurants when their spending dries up. There you go. Australia's retail industry, already struggling for sales among frugal customers, is also in the firing line. Well, yes, we've seen that, haven't we, guys? We've seen the retail industry, how it's going. Major outlets like Harvey Norman, Holdings, JB Hi-Fi face potential shortfalls of stock. China is the key source for mobile phones, computers, televisions, and for Harvey Norman furniture and mattresses and cushions. Should a supply shortage emerge, it will be difficult to offer the sales and discounts that have been necessary to bring customers through the door. The scale of China's dominance in these sectors means that there isn't another country that can easily step in to make up for these shortfalls. This could trigger something unforeseen in almost 20 years. Inflation on electrical and consumer goods. Well, maybe I need to hold on to my old Xbox One so I can sell it when it goes up in price, guys. Here, these other preppers hoarding tobaccos. I should be hoarding mobile phones and Xboxes. What do you reckon? The ripple effect across Australia's economy has rekindled the question of whether the country is too concentrated on supplying and being supplied by China, a debate that has flared before, but never with such compelling backdrop. Well, yeah, guys, it's very simple. We are a country with a very, very low economic complexity, 59th in the world. You don't like that number? Let's look at the Harvard number, guys. I will bring that one up here as well. Hang on. I'll bring up the Harvard number. Here's the Harvard Atlas, everyone. They have a different methodology for measuring it, and it's even worse. We're 93rd in the world. Is GDP the same? 2017, their GDP per capita is 54,000. Here we have 48,000. So I wonder which. Both the same year. We'll have to see. I mean, but regardless, OECI is terrible, whichever method you use, because we're just exporting raw materials, importing advanced goods. Does Australia even have the capacity to make a silicon chip rather than a university laboratory? I wonder. So, Reserve Bank Governor Philip Lowe in the past has argued that Australia would find alternative markets if Chinese demand waned, but prices would probably be lower and therefore the country wouldn't be as prosperous. The central bank, which hit pause on last year's interest rate cuts for fear of driving up home prices and debt, is clearly worried about this growth risk. Now here's an alternative. I would argue that so much of the wealth of our civilization, of our nation, has been pushed into housing, artificially through market manipulation. That's with capital gains tax, with negative gearing, and now we've got a whole culture that's developed around property. Why would you take the risk dealing with all the rigmarole, the pain, the hassle, the red tape, the bureaucracy of starting a business when you can just flip houses? Why? Get a cushy civil servant job, guys. Get paid, wage growth that's above private sector. Cash your check every week. Just keep voting for more civil pay rises, more taxation. Then just write it all off by negative gearing and flipping houses, one after the other. And we have tremendous foreign investment coming in as well into our housing sector, which overheats it too. This is the thing, guys. Everyone thinks their way of intervening in the economy is going to be the best way. It's going to be the right way. We'll do it right. Maybe we should just try everyone stepping back a little bit. We'll see. We will see. The outbreak presents a material near-term risk to the economy, to the economic outlook for China, and for international trade flows, as we've seen in the video I did yesterday, or a couple of days ago, about just international shipping. It's fascinating seeing how fast these ships move all around the world, and how many of them are going to China. It's even grown since we looked at that visualization. So, and thereby the Australian economy. The RBA said in minutes on its Feb 4 meeting, where it kept rates at a record low of 0.75. S&P Global Ranking said Australia faces a material knock to growth from the virus and has cut its GDP forecast by 0.5 percentage point. It expects the RBA to respond by easing twice more this year, taking the cash rate to an estimated lower bound of 0.25%. Now, correct me if I'm wrong, everyone, but wasn't that the rate that our governor said he would start implementing QE here in Australia? 0.25? I keep thinking it's 0.5, but it's actually 0.25. Let me know in the comments, guys. So, fast adoption. LNG exports to China now account for 1/3 of Australia's total. There you go. There you go. We mentioned this in another video too. Look at that. Boom. Queensland government is expecting it to grow. So even before the virus, Australia's government was trying to diversify export markets with a series of free trade agreements. The latest was with northern neighbour Indonesia, the world's 4th most populous country, and it's still negotiating one with India, on track to overtake China as the world's most populous nation this decade. Australia is also in talks with the European Union, the UK, and has inked deals with Japan and South Korea, and joined the regional pact formerly known as the Trans-Pacific Partnership until President Donald Trump pulled the US out. But it's hard to escape China, even where Australia started off with diverse customers, such as with its vast liquefied natural gas projects. Beijing is increasing its purchases of the fuel each year. Up in northwestern Australia, site of major iron ore mines and offshore LNG projects, the number 1 and number 3 exports. The news is better. Iron ore ships take 14 days or so to sail to China, covering the quarantine period, and LNG is relatively well insulated by long-term contracts, but prices have slid as traders factor in the bloated demand. That impact will eventually find its way to Australia's pockets. huge iron ore, coal and natural gas prices are key to the terms of trade, the economy's income, and this filters through taxes to government coffers, underpinning Australia's AAA credit rating, and makes it way easier. It makes its way to households in the form of welfare payments, tax cuts, or health and education spending. In other words, a threat to commodities revenue is a threat to Australia's financial muscle. There you go. Tax receipts closely linked with terms of trade. Year-on-year change in terms of trade, year-on-year change in tax receipts with a 1-year lag. You can see here, well, pretty closely aligned. Long term, there's another side of the picture. China's top leaders have signaled they are planning to increase stimulus this year through fiscal and monetary policy. When China stimulates, it tends to build, and while observers don't expect anything on the scale of 2009 after the GFC, the injection is set to translate into demand for steel-making iron ore. Well, what do Bloomberg's economists say? China's vast supply of goods has seen Australia's income stretch further and purchase more than ever before. So to lose your largest customer and largest supplier at the same time is a shock of unfathomable proportions, or unfathomed proportions. The longer the disruptions persist, the deeper the unknowns and the larger the shock will become for the economy. Australia's currency has depreciated a bit over 3% in the past month as investors, who use the Aussie as a proxy for China, pushed it to decade lows in response to the crisis. Even still, John Pearce of UniSuper worries that the financial market still isn't grasping the scale of the crisis. We have the world's second largest economy, the world's engine of global growth, effectively in shutdown. It's only a matter of time before this starts impacting on short-term corporate profitability, said Pearce, CIO at the $85 billion pension fund. I'm astonished at how complacent the market has been. And here we go. Rutter of the Jordan Fishermen's Cooperative says boat owners are waiting for the lobster market to restabilize to get skippers and deckhands out to sea, and onshore staff like truck drivers and export packers back to work. Still, he's philosophical. All our concerns and the issues we face just pale into the insignificance compared with what the Chinese people are going through. Well, yes, he has a good point. Not being able to work, an industry declining, is much worse than the suffering they're going through. So guys, here we have it. Bloomberg article on Australia's... Oh, you hear that thunder? I just did. It looks like it's raining here in Brisbane. Australia's extreme dependence on the Chinese economy. What do you all think? Do you think it'll have an impact? Do you think we're not even starting to realise or see what's happening? I'll be very interested to see the job figures that are coming out this week, and we'll have to keep an eye on the GDP growth. Anyway, thank you all for watching. Please like, share and subscribe to the channel. If you're a fan, please share the content, get the video out there, help the channel spread. We're only a few people up from 11.3k subs. I'd love to hit that number in the next few days. Finally, we have a few other ways you can support us. You can join the channel on Patreon with a small monthly donation that helps pay for the equipment and things we use. You can do the same here on YouTube, joining the channel and get access to emojis and badges. We have affiliate links for Amazon and eBay for your consumer purchases, although I suggest if you're buying something from Amazon, I'd go with an Australian supplier at the moment. We also have affiliate links with Independent Reserve and Kucoin for your crypto traders, and finally Pocket Squares from the HeiseSays website. We also have PayPal if you want to contribute that way. Thank you very much to everyone who's supporting. We really appreciate it. Take care, guys. Have a great day, and I will see you in the evening video. Bye for now.